Welcome to our Parts Watch training video. This is the first of our 5-part series on posting customer payments, and in this lesson we'll start out with some setups for accounts receivable customers and then move into the posting screen. So let's start out by talking about a few important setups. The pay type field on the main account entry screen is used to determine how statements are presented and therefore how payments are applied. There are two basic accounting types, open item and balance forward. Open item standard is a true open item method that allows credits and payments to be applied to individual invoices. This method is used for customers that send in payments for certain invoices. The statement will show all open items and unapplied payments and credits, regardless of age, and will show applied payments and paid debits if the Include Paid Items on Statement flag on the AR Control Setup screen is checked. The Balance Forward method applies charge and credit invoices to the current balance and payments to the oldest balance. This method is used for customers that remit the amount due and don't care about paying by invoice. The statement will show current invoices and previous balances for any unpaid amounts that are 30, 60, 90, or over 90 days. And for weekly accounts past 7, 14, 21, over 21 days. And if you want a combination of the two accounting types, select Open Item Statement Pay. With this type, it's possible to print a statement showing a previous balance of the unpaid transactions from the previous month and still apply payments to the individual invoices. This statement will show current invoices and previous balances for any unpaid amounts that have past due balances. However, payments and credits will be applied to individual invoices the same way they are for open item standard accounts. And cash customers are not tracked as AR. Another setup that's important for charge customers is terms if you give your customers a prompt payment statement discount. Customer terms are set up on the AR Control Setup screen under the Statement Settings tab. Enter the percent, the term's description, such as 2% 10, net 30, the balance limit for the term to apply, and whether or not the term should print on the statement. Then go to the main account entry screen and apply the terms per account under the Statement Setup button or the Account Mass Update screen to mass update them to multiple accounts at the same time. The customer can have up to 3 terms, so the setup might be something like this. Then the system will look at the balance of current and calculate the 2%, 2.5%, or 3% discount, depending on the balance limit. Okay, now we'll go into the Post Entry screen by clicking the Customer Entry Info, Post Entries menu, or if you're already in Main Account Entry, click the Post Entries button on the bottom of the screen. If you go to the posting screen from the Main Account Entry screen and a customer is displayed, that customer's detail will be automatically displayed when the screen opens. Or enter a customer in the Customer Lookup field or click the button to search for a customer. Once a customer is entered, that customer's name, address, phone, and fax display along with the account number and account code, and the transaction detail displays in the lower grid. And for convenience, the pay type displays in the border. The account balances display the current period and 1 to 30, 31 to 60, 61 to 90, and over 90 aging period for monthly accounts, and 1 to 7, 8 to 14, 15 to 21, and over 3 weeks for weekly accounts. The age code field on the Account Statement Controls window is used to determine whether the account is monthly or weekly. And incidentally, while we're looking at the age code, the Age Store field is used to determine which store is responsible for the account for multi-store enterprises and is used so that only one statement is printed for an account that buys in more than one store. There is a Statement Setup flag on the AR Control Setup screen that controls how the balances display for open item accounts named Show Unapplied. If the flag is checked, the aging period balances are not reduced by the value of unapplied credits that were created in the period. However, the balance field is reduced by the amount of the unapplied credits and payments. The total amount of the unapplied credits display in the unapplied credits field, and if the flag is unchecked, each period balance is reduced by the value of the unapplied credits that were created in the period. The balance field is the total of all aging periods reduced by the amount of the unapplied credits and payments. The unapplied credits field reports the total of invoice credits and post-it credits except for payments, and the unapplied payments field reports the total of payments and discounts. Both fields display the totals for information only. When the account number is entered, all entries for that account display in the lower grid and are sorted first by date, then by posting code. Unpaid invoice debits display at the top with the corresponding credits and other adjustments beneath the debit, in the order that they were created for open item accounts. Fully paid debits and their corresponding credits do not display in the Post Entries screen, but can be displayed in the View Entries screen. We'll get to that screen later. Okay, now let's talk about posting codes. There are several that can be used to post transactions, and each has its own functionality. PCs are payment credits used to enter payments. CMs are credit memos and are used to apply a credit for any reason to a transaction or balance. And DMs are debit memos that are used to apply a debit for any reason to a transaction or a balance. IAs are called invoice adjustments and are used to identify any adjustments, debit or credit, applied to an invoice or a balance as an invoice adjustment. TAs are tax adjustments and are used to identify any debit or credit added to adjust an invoice or a balance as a tax adjustment. However, the TA code is not tracked to the sales tax report, so any TAs posted here must be tracked manually. And PEs are posted errors. PEs are used to undo a payment made either as an ROA through point of sale or posted here that were entered incorrectly. We'll walk through posting each of these transaction types and how to reverse a payment in a subsequent video in this series. And there are several posting codes that are created by the system and can't be entered manually. IDs are invoice debits and identify any invoices created at point of sale. ICs are invoice credits and identify any invoice credits for returns created at point of sale. PBs are previous balances for balance forward accounts only and are created at the end of period aging for any transactions that have not been fully paid. FCs are finance charges applied against overdue amounts during the end of period aging. DCs are discount credits taken by the customer for prompt payment. CEs are cash entries and identify any invoices that were paid by cash. They are not in the totals and are shown with the account for information only. RCs are recurring charges, and DAs are dated invoices that will not become due until a future date. Dated invoices can only be created through point of sale. Okay, we're going to end here and pick up our discussion by identifying the fields in the screen grid in the next video. So be sure to join us and please wait until you've seen all 5 videos in the series before contacting customer support if you have questions. And thanks for joining us.